Hello, it's Robert Miner with Dynamic Traders Group with this week's DT 5-minute or so update and trade strategies, where we take a look at a few markets briefly for next week and potential trade setups. So we make this brief video for our Twitter and YouTube followers. And of course, if you like what you hear and what you learn, check us out at our regular DT reports at dynamictraders.com, where we do much more extensive and detailed videos at least once or twice a week for our DT Report subscribers with specific trade strategies for many markets. In this video, we look kind of briefly at a few markets, but it'll give you a good idea of what we do and what to be alert for in the week ahead. So let's get started. Well, if you've been following us for a while, you know about crude oil. For the last week or two, we've been anticipating that crude would complete a weekly low. A weekly low means it'd be a low that would last at least 3 to 4 weeks and have at least a corrective rally to the 50% retracement of the decline. Now, it could be a much higher time frame low, but at the least it'll be a weekly low. Well, it's confirmed this last week that that should be complete. Last week, we made what we call a dual look-back weekly momentum bull reversal. We traded above the last week's high, and we made a two-close bull reversal. That's where we closed above the closes of the past 2 weeks. So more than likely, that weekly low is complete, and we're just in the initial stages of what should be a bull trend for several weeks at least. Of course, trading is not about forecasting. It's about identifying conditions with a high probability outcome. So when we can identify a reversal very soon, when it's happening or after it's happened, we can position ourselves, in this case long, with a very short capital exposure, just in case the market decides that's not correct, as it did this past week with the euro. Let's take a look at the euro. This is Euro daily data, and I'm going to put my cursor on the bar of last Tuesday. That's this bar right here. So last Tuesday, the euro made what we call a daily momentum dual look-back bull reversal on this reversal day, where it closed above the close of the prior day. It was right in or near the end of wave 5 price target zone, and some other technical features were at that point in time for a probable low, and it was a great setup for a long trade the next day, either on a higher close or taking out that higher, even on the close of this day. I personally went long. What happened the next day? Boy, just the opposite. Went down really hard, wide range day to a new low below the lows from major lows, significant swing lows in last September, October. So that was a setup, that was an ideal technical setup that allowed us to enter with a very short stop or low capital exposure, got stopped out of it. And we traded down to new lows. So is the euro in a big bear trend? Well, probably not. Nothing has really changed in that it's near extremes from where at least a weekly low should occur. So our daily momentums have been oversold for about 4 or 5 days. That's usually about the maximum time of being oversold before they make a daily low. And I'll go real quickly. Here's the weekly. The weekly, of course, they made a new low. I did not expect it to make that new low at all, but once we had this ABC confirmed, the new low was probable. We made that, but we're right down within pips of the 78.6% retracement. That's important. There's some other very important price relationships here. I'm not going to go into details on those. If you'd like to learn about those, check out our regular reports. And the weekly momentums have reached dual look back oversold. So we're very, very near a weekly low. And what I'm looking at for Monday, if we close above Thursday's close, that'll be my setup to go long. It's got to be above Thursday's close, not Friday's. Of course, there's more details to that, but you should be aware that even though we've made these new lows, which has made a lot of news, that we're at the extreme of when we ought to complete a weekly low. So, of course, that means a weekly high in the dollar. So look for that early next week. Nothing has changed with gold from what we've been looking at over the last few weeks. Is gold has continued to be sideways, and we're should continue for another 2 to 3 weeks to be in this correction prior to resuming the bull trend. So I won't go in details with the daily data and all, but just a quick look is the weekly momentums do a look back bearish, and they're not oversold. So that itself indicates probably 2 to 3 more days or 2 to 3 more weeks sideways to down before we complete a weekly low and resume the bull trend. This DT oscillator is really helpful to identify reversals, not just in momentum but in price. And again, we should be sideways to down 2 or 3 more weeks, and the maximum should be the week ending March 6th. That's the high to low, and that's usually the maximum target to complete a weekly reversal. And I'll explain that more and why that's the case in our regular reports, but all you got to know is it's not a forecast that we're going to be sideways to down to March 6th, but that's the maximum time before we make a weekly low. That's 3 weeks away. And that's what the bearish weekly momentums indicate. So more than likely, again, sideways to down 2 or 3 more weeks, but then it's going to be a fantastic trade opportunity on the long side to continue the bull trend, probably to significant new highs. So if there's any time for you to think about subscribing to one of our DT reports, now might be that time, because we got not only gold, silver, and the GDX, probable major reversals in the next 2 to 3 weeks, but in several other markets as well. Okay, let's take a look at one more, everybody's favorite, the ES or the S&P. This is the S&P cash index. So the reason I'm showing the cash and not the ES itself is to get rid of that overnight volatility that kind of skews what some of the trends and daily patterns look like. So here, this is Friday. Friday was actually an inside day, very narrow range inside day. Did close up a bit from Thursday's close, but what's significant is it did make a daily dual look back momentum bear reversal, and that warns us that we're at, if not having completed, at least a daily high. Now, a daily high is not a real big deal. It just means we're going to be sideways to down for 3 to 5 days. But because this was made on an inside day, is we have to wait until Monday to see if we get a confirmation, and I call it a pattern reversal confirmation, of the momentum bear reversal. So there's a couple things we look at for Monday. I'm not going to go into details on those now, as I did with our regular report subscribers. However, for you, just be warned that at the least the immediate upside should be very limited. And if you're a relatively short-term trader, meaning you take trends that last, let's say, 3 to 5 days, just be aware that we're near that daily high, and we should then be sideways to down for 3 to 5 days. Typically, we'd reach the 50% retracement if this indeed is a 5-wave trend, as I've got it labeled. So not a big bear trend by any means, not what I was expecting. We were going to begin certainly back here after the January high, and was looking for earlier a couple weeks ago, but right now just looking for that tradable trend, tradable daily trend, 3 to 5 days sideways to down. So we're going to be aware of that probably beginning very early next week, if not Monday itself. Well, that's it for today. Robert Miner over and out. I hope you'll join us in our DT reports. So check it out on dynamictraders.com. Take care.